you.
Shall we begin, do you think?
Yeah, I'll just continue to let folks in as we go here.
Okay. Well, good morning and welcome to the Cedar Valley CPCU July 2022 chapter meeting. The topic today is going to be consumers' perspectives of insurance. We have a special guest for you all today in Hal Larson. Hal is a retired corporate risk manager for Kent Corporation in Muscatine, their manufacturer. He is currently a professor at the University of Iowa who instructs risk management and insurance courses. He has been teaching at the University of Iowa for the last 7 years. And in consideration of how presenting today, we, the chapter, are going to donate $250 to the Bond Institute of Risk Management and Insurance at the University of Iowa. This money will be used for student scholarships. And we just wanted to thank Hal for selflessly taking time out of his day to provide this insightful and valuable information to our chapter. Without further ado, I'd like to welcome Hal Larson.
Thank you. Thank you, Nate, and the members of the CPCU Cedar Valley chapter. I was a member I was a CPCU for a number of years, and since retiring and getting out of the underwriting field, I dropped my membership. Probably shouldn't have done it, but as a quick plug, for those of you who may not heard, on August 18th, there is a Vaughn Institute golf fundraising event at Vinkmine College, where we invite people in to play golf in a golf tournament. We have RMI students on the course stationed at Greens and Ortiz so that they can visit with and meet people who are attending, people from the insurance industry, insurance companies, brokers, et cetera, et cetera. Not cheap. I think it's a $250 registration. So hopefully if you were interested, your company will sponsor you. Students have actually made connections with industry professionals and in some cases have obtained jobs through that interaction. So it's a good program. It raises a lot of money for student scholarships. I graduated from the University of Iowa in 1970 with a BA major and a specialization in insurance. So that you know, we are in the process and have an application filed with the Board of Regents to create a new RMI major at the University of Iowa. So we hope to get that approved and active and in force in the 23-24 school year. So we'll see where that goes, but it'd be nice to get a major back in the program. As far as perspective is concerned, and what I want to talk to you today about is obviously my perspective of the issue of consumers' attitude towards insurance. It comes from 52 years working in the field of insurance and risk management. My perspective covers a unique spectrum of sales, underwriting, home office underwriting management, home office operations, and a consumer purchasing personally as well as professionally. I spent 17 years with a company then known as Farmland Insurance Companies, today known as Nationwide Agribusiness Insurance Company. I worked in commercial line sales for 10 of those years in the field, selling commercial products and employee benefit programs to basically cooperatives. From there, I moved into the home office and became a desk line underwriter. And following that, was promoted to and became the director of commercial lines underwriting for the company. That company today is now known as Nationwide Agribusiness Insurance Company. Unique opportunity experience that I had when I was there as a director of underwriting was that the actuary and I took 7 individual policies and wrote a blanket policy incorporating all of those policies into a single policy for the consumers, covered the various multiple lines of property liability, not workers' compensation, not umbrella, but surety, employee dishonesty, transit, etc. Unique project, took a couple of years, a unique product for the industry. Unfortunately, Nationwide at some point in time after they acquired the company decided it wasn't an ISO product and they chose not to use it anymore, but it worked extremely well for our company for that period of time. Insureds had a chance to have basically 1 or 2 policies in their portfolio to look at, to learn, and to digest, rather than have 8, 10, or 12 of them. For 28 years, I was the corporate risk manager at Kent Corporation in Muscatine, Iowa. So the perspective of consumer comes in very critical there, in the sense that I was obviously responsible for not only the risk management for the corporation, but for managing the insurance programs, both through renewals and claims and et cetera. 6 years, I've actually actively taught for 6 years. I'm going into my 7th year as an adjunct lecturer at the University of Iowa, presently teaching principles of risk management and insurance. As I said earlier before we started, I'm in the process of developing and creating and writing a book to create a new class, or a potential new class, for the university, titled Corporate Risk Management and Commercial Insurance. With any luck, we'll get that into the course curriculum in 23-24 or 24-25. We talk about consumers' perspective of insurance, and unfortunately, way too many consumers just don't understand and or care about insurance. And just a quick comment, I want to spend most of my time talking about the commercial insurance marketplace, but a quick comment about personal insurance. Most people understand and know they need car insurance and they need homeowners insurance, either driven by state law or driven by lenders, mortgagees, who require them to cover homeowners insurance. They generally don't understand it. They don't know. They know either what their agent has told them, what a neighbor has told them, or what a claimant has told them. And in degrees of criticality and importance and value, what their agent told them is best, what their neighbor told them may be good, and what the claimant told them is not going to be in your favor. It's generally not a good environment. I can guess, and if I took a poll of people, there's probably 1 or 2 of you at best who have ever even read your own personal auto insurance policy or your homeowner's policy. It's just not something that consumers do. They rely upon their insurance agent or their agency to help them purchase insurance, to help them when they have a claim. And generally speaking, they probably never otherwise touch their insurance policy. So I think the industry can do more for itself in the sense of creating a better consumer perspective, of finding ways to try to educate those consumers. It may be podcasts, it may be videos, it may be policyholder seminars, or sometimes bringing people together to help them learn about what they have. The better they know, the better they'll deal with it. If in fact they have a claim that's not covered, they may be more capable of understanding or accepting the fact that it's not covered. And if there are things that aren't covered, they have an opportunity to learn about and handle and purchase more insurance. So lack of knowledge, lack of awareness, and lack of information is not necessarily positive, but it isn't, in the personal insurance world, I think, overly negative. It's just a consumer's posture. So I'll give you an example, and this advertisement grates on me frequently, and my apologies to anybody who is on here who happens to work for Liberty Mutual. But Liberty Mutual Company has this advertisement that they run all the time. Work with us because you only have to buy what you need. Well, tell me what insurance company doesn't have those same attributes, those same capabilities. There are certain things in auto insurance are required by state statute. The rest is optional. Uninsured motorist, underinsured motorist, auto medical, auto physical damage. Every insurance company has those options. So I think in a sense, Liberty Mutual sometimes plays upon the naivety of the public, in the sense that, come work with me because I have something different. I have something new. I have something of value that others don't have. That's just not the case, but they're not lying. They're telling you the truth. It's just not sharing that everybody else can do the same thing. So from a big picture basis, when I talk about commercial lines insurance and consumers' perspectives, I equate this to the old movie called The Good, the Bad, and the Ugly. The ugly is a consumer that you really don't want as a customer. You may end up with them because marketing sold them, or by some other means, they didn't realize what a customer they were. They don't respect insurance. They don't want insurance. They think it's an unneeded cost. They would rather not have it if they didn't have to. They consider it a commodity. And in most cases, they look to get a rate of return. They paid money for claim or paid money for premiums. They want money back in claims. That's not a profit situation for the insurance company. It's just not going to work out. Basically, they want their money back. Not the premise of the principle of indemnity, not the premise of insurance, and it certainly doesn't bode well for the insurance pricing atmosphere of the insurance company. They will change carriers in a heartbeat for a small change in premium. They're not going to be a loyal customer. The first 2 years or 3 years that you have an insured on your books, they're the most costly years. The latter years, hopefully you're making better money and making more money. But if they're constantly changing, they have no relationship with the insurance company, and they don't care to have a relationship with the insurance company. They simply and only care about the cheapest cost. They're bottom line feeders for premium. They're with you today, they're with somebody else tomorrow, and beyond there, they don't care. So avoiding those customers, getting rid of those customers can be a big target and a challenge for insurance companies. There's a quick little story I'll share with you, and I call it Turn Off the Porch Light. So an insurance broker agent is sitting on his porch after a round of golf with a prospective customer who he knows. They're visiting, they're chatting, they're talking about insurance. And through the course of the conversation, they're sipping on beer. And the agent of the broker hears the customer say, well, my attitude about insurance is if I pay $500,000 in premium, I expect to have $500,000 in claims. At which point the agent or the broker stands up, picks up his beer, walks to the front door of his house, opens up the door, goes inside, locks the door, and turns the porch light off. I hope that you have marketing personnel that works with your company that's willing to walk away from customers like that are not positive for the company. And so as an axiom in learning experiences that I had with the insurance industry, we always came up with and had some training courses on things like that we tried to put a tagline to it. And the tagline to that, for me, to remember the story and its implications are, turn the porch light off. Be willing to walk away from that customer. Those bad customers are just an expense and a nuisance to you. They will drive your claims department. They will drive your customer service department, and they're likely to drive your underwriting department crazy with all their pushing, their changing, their demands, they're complaining about certificates of insurance, and auto insurance ID cards, and pricing, and endorsements, and timeliness, and etc. A bad customer is a bad customer, and you're better off, quite frankly, without them. That's the ugly customer. Then you've got the bad customer. They're kind of a step above the ugly customer. They are a low-cost consumer, but they're not willing to just change willy-nilly on any notice. They want to get a cheap price. They don't necessarily care that much about service or quality. They'll change carriers quickly, as does an ugly customer, but not quite as quickly. They are not really willing to learn, listen, and understand anything about the insurance product, the insurance policy, or the insurance company. Selfishly, they, like an ugly customer, only care about their bottom line, their cost, and what they get out of it. The insurance company in many cases can take these customers and mold them and help them grow and change into a better customer. If you don't, they're likely to slip into the ugly customer category. From a standpoint of the third category, the good customer, they're obviously the most desirable customer. They're generally speaking your most profitable customers. They respect the value of insurance. They respect what it does for them and their company in protecting the risk of their business. They want to have a business partner. Now, this is not a partnership, but I always considered in a risk management role, the marketing people and the brokers and the claims people to be a business partner in our corporate relationship. They were there to help us manage our risk, protect our risk, and manage our costs, and guarantee the solvency and perpetuity of our company. These people are willing to learn about insurance, about underwriting, about pricing, and understand why the insurance company is doing what they're doing and the value it brings to them as a consumer. The more they learn about the product, the more understanding they are about claims and the value of claims or the lack of coverage of claims, and makes it much easier to deal with them from a standpoint of other people in your company. They are price conscious, but they're price conscious in most cases in a mutually beneficial situation. They understand that the insurance company has to make a profit. In contrast to the ugly customer, he didn't care if you make a profit or not. He gave you $500,000. He wants $500,000 back and doesn't respect the fact that you have expenses to run your business. Doesn't respect the fact that you have to make a profit to stay in business so that you can then be there to service that customer in the future. They want, in most cases, to improve their risk. They want the consultation of loss control services. They want to understand what isn't working, what is working. They want to understand what isn't covered, because they understand that it is a benefit to both parties. And they're willing to retain some of their risk. They're not in a position of just passing it all off to the insurance company. An insured who is a first dollar coverage customer basis only is probably not going to be your most profitable customer. Those who choose to absorb deductibles, have loss sensitive rating programs, and other processes where they assume and retain risk are going to give you, in some cases, less premium, but it's going to make a better customer out of them, because where they have skin in the game, they will manage the risk. Where they have no skin in the game and a claim occurs, they're just happy to pass the claim off to you and get you to pay it and go about your business. They, in most cases, desire a long-term relationship. They're not here today, gone tomorrow. They want to work with you. They may become dissatisfied over some piece or function of service, but they're willing to accept the fact that we all make mistakes. Everything isn't right all the time. Nobody's perfect. And if they can mend the situation, fix it, and move on, they're a better customer. I look to this as creating a challenge for the industry. It's not just underwriting or sales or claims, but the industry in general needs to create an atmosphere that creates and fosters trustworthy, mutually beneficial relationships. And those are easy to say, hard to do. And the more the company works to create that atmosphere with a customer, the better customer they're going to be. They also respect and hope that the insurance company respects that insurance is not the first choice the risk manager chooses to manage a risk. It is an option. It is a choice. It may not be the best or the most economical operation, but in many cases, it's a necessary approach. Catastrophic losses are such that you just can't manage them. Insuring them is the safe way to go. And everybody understands that there's a mutual benefit in that process. Making sure that consumers understand that insurance companies are not greedy, selfish, money-grabbing businesses that are making undue amounts of profit that's unfair to society and them as a customer is a big job. Unfortunately, there are some negative atmospheres and attitudes about insurance companies and their profits. I hate to say it, but sometimes we're our own worst enemy. Some of our actions, some of our people, whether they be claims or sales, can create some real negative atmospheres for customers. And unfortunately, those impugn the reputation of the good companies. So the good, the bad, and the ugly are out there. You're going to deal with them probably every day, all day, many times over. And I hope you have more good than ugly. And I hope you can take the challenge that of those that are what I call the middle ground, the bad, they're moldable, they're changeable. You can work with them. You have a chance of keeping them from sliding into the ugly category and hopefully becoming a good, positive customer for you. Creating that open and transparent communication between the insurance company and its departments, whether they be claims or underwriting, with the insured is critical. As a risk manager, I demanded of my marketing people that I had access to, would get to know the underwriter for the policies that I chose to purchase, and that we would have an ongoing dialogue and communication so that I understood them and they understood us as a company. From my standpoint, if the marketing people came to me and would not give me access to the insurance underwriter, either I had the wrong marketing person or I had the wrong insurance company or both. Having that transparent communication is critical to creating that mutual trust relationship situation. FM Global has done an outstanding job in my mind. I worked with them, and I think the company that I work for still works with them. So they've been with them for probably 35 plus years. I know customers who have been with FM Global for as many as 50 to 75 years. So those relationships have lasted long. FM Global created a very strong network of two-way communication and feedback. They had a policyholders advisory board that they invited customers to belong to. And we met with the underwriters, we met with the claims people, we met with the executives of the company. We're able to let them talk to us about the insurance company, its profits and its losses and its problems and its successes. And they allowed us to talk to them about the things that they were doing that we felt could be done better. And the key piece to that was not only the transparent communication, but it was the fact that they listened and they reacted and when necessary, made changes. So it's one thing to say you're going to talk to them. It's one thing to say you're going to educate them. It's another thing to say you're going to listen to them. And if there are things that need to be changed, you're going to respond to those changes. In that further, they developed a membership credit program. So that after you'd been with the company, I think it was for 10 years, every year thereafter, when they had an inordinately, and they're a mutual insurance company, when they had an inordinately good, profitable year, they return premium to their customers based on the length of time that they had been a customer of FM Global. And at the time I retired, we were getting, in the good years, the very good years for them, as much as a 20% return of our premium. Now, they got smart along the way and continued that program, but they said, that is not a return of premium. That is a premium that can be used to apply against the renewal of your policy's premium due. So they put some golden handcuffs on their customer that said, we respect you. We want you to continue to be our customer. We're going to give you back some money because we had an inordinately good, profitable year, but we're going to allow you to apply that to your premium to stay with us for the next year. I told the president of the company that was probably the best program he'd ever created in his life. The credit program was great. To tie it to continuity and continuation of business was extremely good. So I think many times we get wrapped up in our business, we get wrapped up in our individual process, and we lose sight of the outside world. From an underwriting standpoint, you know what you're doing. You're dealing with the applications, you're assessing them, you're accepting them or declining them, you're pricing them. But do you really connect with, do you really understand, do you really know what that's saying to the consumer? What relationship that's creating between you and the company? Salespeople have the same situation. The claims people have the same situation. FM Global also had policyholder seminars where they brought customers in and sat them down in a room anywhere from 25 to 60 people at a time. And they brought in a senior claims person that walked the insured through every aspect of the insurance policy, explained to them what was covered, why it was covered, and where the language said it was covered, explained to them what wasn't covered and why it wasn't covered. And they did this, I'd say every other year at least, constantly inviting customers in, creating that open dialogue of honest information to help the customers understand and value the policy they had, and hopefully become less disenchanted if in fact a claim occurs. I guess with that, I don't think I have a lot more to add. I'd just like it to say, one, thank you for this opportunity to visit with you, to share my perspectives, and they're simply my perspectives over a period of time, and then to open it up to any questions, comments, or concerns that you might have.
I would just like to say thank you very much for your presentation. We sure appreciate it. If anyone has comments they don't feel comfortable asking, if you want to throw them in the chat, I can read them out too. Looks like there was a comment in there that says, I really like the idea that you mentioned of insurance podcasts for insureds to learn more about their policies. So that is definitely a new and upcoming thing. Podcasts seem to be, I don't know, the new way of learning and listening and getting all sorts of communication. So definitely having insurance go down that route would be a fantastic idea.
It's a very flexible, it's a very economical way. And when you do that, I think you have to break it into components and pieces. It can't be an hour long. It can't be a 45-minute long. It's got to be a short burst of information, and people need to know how you're going to manage it. You're going to cover a series of things over a period of time. And it's, I think, a very effective way to connect with consumers that you're not having the expense and the time. And in today's world, virtual is the thing.
A lot of that, a handful of that popped up during quarantine. I know our CPCU chapter in the large one in Illinois started a monthly podcast just talking about all kinds of insurance things in the evening, and kind of made part of it a game and part of it educational. So there are a handful of them out there. You just have to find them.
Another idea is to create a panel of a consumer, an underwriter, sales, and claims, and invite a bunch of customers in to create this kind of a dialogue that's going on, and let them ask questions of that panel. And it just creates an open atmosphere of discussion. I did that at times with, I did it once with a workers' compensation deputy commissioner, a plaintiff's attorney, and a defense attorney for an audience of people. And it was a way to get all perspectives discussed, questions from the field from everybody, and hopefully get some consensus. So how many good customers do you have, and how many ugly customers do you have?
Mm-hmm.
No comment.
It is really amazing how, when you have that relationship with them, how differently things go. Claim situations, renewal changes, those things go a lot differently when that relationship and understanding is there.
When you show somebody that you care, I don't care if it's in your personal life, your business life, your insurance world, whatever it happens to be. You show somebody that you care and you want to help them. It goes a long way. It goes a long way to a successful relationship. I hope these pop-ups aren't dinging in your ears. I
No.
keep getting pop-ups and it keeps dinging, and I'm hoping it doesn't come into you.
Nope, you're the only
Nope.
one. Okay, do we have any more questions for Hal?
Nothing more in the chat unless anyone wants to jump on quick and ask a question.
Oh, I just want to thank Hal as well for joining. I thought it was very good information. And, as an underwriter, I think it's easy to get caught up in your goals and what you're trying to do and just lose sight of the customer, which is at the end of the day what we're trying to do. And, I think it is a challenge because you're just sitting at your desk away from everything more so than you'd like to be. And, but something to keep in mind for sure. So I thought that was a good point.
And it's a challenge to your supervisors and your managers because they're even more ingrained and deeper into the product. And so you having a chance to talk to them and help them understand some of your feelings about how you might be able to reach out, or the company might be able to reach out and make the good customer an even better customer, I think is valuable. It shows that you care about your job. It shows that you care about your customers, and it gives them some idea of improvements that the company could undertake.
And it doesn't hurt if you serve them food.
Yeah, that's true.
You feed your boss.
Yeah. Feed the hands that feed you, right?
Yep.
Okay, well, thank you so much, Hal. You're welcome to come back anytime you want to share some more insights with us. And if nobody has any further questions, I think that will be it for the July meeting, and we'll see you all again in August.
Now you can scurry off to lunch. Have a great day. Thank you.
Thank
Thank
you.
you so much.
You bet. Bye.